Artificial intelligence is the single biggest driver in the market right now, but that does not mean every AI stock is trading at nosebleed valuations. Look closely, and some of the biggest AI leaders remain completely reasonable. There are still serious bargains to be found. Today, we are digging through the bargain bin for 3 market-leading AI stocks trading at massive discounts to their growth. Let us get into it. It might sound crazy to call the poster child of the AI boom cheap, but hear me out. Nvidia currently trades at a forward price-to-earnings ratio of just 16 times fiscal 2028 estimates. For the fastest-growing giant on the planet, that is remarkably low. For a company whose revenue has climbed more than tenfold in just 3 years, 16 times earnings is practically a steal. This explosive growth is led by their GPUs, the gold standard for training AI models. But Nvidia's biggest strength is not just the hardware, it is their ability to see the future before anyone else. They seeded their CUDA software into early AI research, building a massive moat. They acquired Mellanox, turning networking into one of their fastest-growing businesses. And their move for Groq positions them to win AI inference next. That forward thinking makes Nvidia a must-buy while it is still reasonably priced. Next up is Micron Technology, and if you want a truly minuscule valuation, this is it. Micron trades at a forward price-to-earnings ratio of just 6 times its fiscal 2027 estimates. That is less than half of what you pay for Nvidia. Micron is one of the big 3 makers of DRAM, which is about 75% of its revenue, and the AI boom is creating a massive supply and demand imbalance. AI needs high-bandwidth memory, or HBM, and that eats up 3 times the wafer capacity of ordinary DRAM. On top of that, there is a huge manufacturing bottleneck. Every memory maker has to compete for the exact same extreme ultraviolet lithography machines, built only by ASML in the Netherlands. That severely limits how fast new capacity can come online. So what does this mean for Micron? Constrained supply plus surging demand equals skyrocketing memory prices. Micron is riding a memory supercycle, generating huge margin gains and surging revenue, and this dynamic looks like it is here to stay for quite some time. Our third bargain is an e-commerce pioneer that doubles as a cloud computing giant, Amazon. Right now, Amazon Web Services is powering a huge chunk of today's AI infrastructure spending, and they have formed incredibly strategic partnerships with leading frontier labs like Anthropic and OpenAI. Meanwhile, their core e-commerce business is hitting on all cylinders. It is finding serious operational leverage from Amazon's own internal investments in robotics and AI, 2 massive industries, both firing at once. Yet investors have grown wary of the heavy infrastructure spenders. That leaves Amazon at a forward price-to-earnings ratio of just 23 times 2027 estimates, one of the lowest valuations in its entire history. That is even cheaper than some traditional brick-and-mortar retailers. It is a foundational stock to own for the long term, and right now it is on the sale rack. So there you have it. Nvidia, Micron, and Amazon, the undisputed king of AI hardware, a memory giant riding an unstoppable supercycle, and a cloud titan trading at historic lows. If you want to add AI exposure without overpaying, these 3 belong on your radar. So which of these 3 do you think has the most upside? Drop your thoughts in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more deep dives into the best stocks on the market. Thanks for watching, and I will see you in the next video.